Most traders will never make money reading the tape without being aware of 4 hidden major mistakes that tape readers make. In this video, our head of trader development helps you evade each of these mistakes so you can turn tape reading into your secret weapon. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to develop numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from our prop firm so you can grow your trading account.
Are you struggling to make sense of the tape? You're not alone. You know, most traders fail to spot key opportunities because of very common tape reading mistakes, and it's costing you money. In this video, I'll break down the top mistakes traders make when reading the tape, mistakes that can really set you back. And the crazy part is many traders are never even aware they're making them. So getting right into it, here's the first and biggest mistake traders make when they're reading the tape. Mistake number 1, they're overanalyzing every tick. A bunch of traders try and make sense of every single tick, every price movement. But tape reading's about spotting patterns and key levels. It's not about obsessing over noise. So I'm the first to admit that 90%, maybe even 95% of all the tape out there is just randomness. It's noise. It's not statistically significant. There are 9,058 tradable products listed on a simple like FinViz scanner. That's too many to consider anyway. So if we break it down into a tradable universe, things with a decent amount of volume, say over 1 million, and a decent range, say over $1 average range, we still get a universe of 834 stocks in our potentially tradable universe. Every trading day is 6.5 hours or 390 minutes. So that equates to about 325,260 minutes of tape every single day. But for most days, about 60 minutes of tape is totally critical. That's like 0.02% of all the tape that's out there actually mattering to us as traders. And I get it. There are tons of beautiful stories about traders who used to just sit there and they'd read the tape all day in one symbol and they'd constantly make money. And there might still be some out there. But in what I do and how I've been passionate and driven about being the guy that helps traders get impactful results immediately, those outliers out there are not a good example of what works. And even worse, they create this trap for themselves that so many fall into of doing the right thing at the wrong time. They're making the right effort in trying to read the tape, but they're doing it at the wrong time. And as a result, they're almost doing more damage than they are good. We were doing a reading the tape session in our Inside Access training the other day, and we started with a stock getting ready to make a breakout. But before it, the stock was just in this range. It was choppy and it was in range. Honestly, the tape was meaningless at that point. And I could hear the newer traders saying, "Did you see that bid stepping up there? Oh, look, held offer." But these were all on things that didn't matter. And these traders were just blurred out things before the real opportunity even developed. The key is to do the right thing at the right time. So as we talk through the other 3 mistakes, we'll wind them together to create a path forward, a roadmap of best practices that can help you sidestep these big mistakes and do more of what matters when it matters. You can use this skill in a way that gets real results for your trading. Tape reading is this foundational skill for intraday trading. Tape reading gives you a real-time understanding of supply, demand, and market sentiment. It's like having a front row seat to the market's decision-making process. Now, tape reading gets its name from that old ticker tape machines, the ones that used to print stock quotes on this continuous paper ribbon. Traders would literally read those ticker tapes to analyze market movements, hence the term tape reading. Now, this practice was prevalent way before the widespread use of computers and electronic displays for market data. Traders would stare at the tape because that was all the information they had available to them. It must have been sort of like playing roulette. You buy a stock based on the action on the ticker tape and just kind of wait to see what happens as the ticker tape keeps kicking out time and sales data. Fortunately for us, things have evolved slightly, and you can now get the information from anywhere. You don't have to call your broker. You don't have to sit there and read a ticker tape. But think about what information we have that others never did. But traders made money reading the tape then, and traders still make money from reading the tape every single day. Now tape reading's watching the level 2, the posted bids and offers, and the time and sales, the posted transactions, and then the interplay in between those three. There's some technologies that visualize reading the tape, and I hear a ton of new traders that use them. They talk about them as if they're magic, this magic bullet, but I don't hear many, if any, experienced traders using them on a regular basis. If you read through the great stories in Jack Schwager's Market Wizards volumes, you'll find a theme running through the 60-odd biographies collected there: tape reading. So most of the world's greatest traders are also great tape readers. A lot of them supposedly began their career trading nothing but the tape. But again, starting with only the tape would put us at this handicap we don't need to give ourselves. Starting with only the tape doesn't get the immediate results that we're looking for. And being aware of these mistakes and our beliefs that the tape is everything or that the tape is nothing allow us to get more impactful results in our time invested in developing our skills. We have to find ways to be more effective with our time, which takes us right into mistake number 2. So mistake number 2 is ignoring the opportunity. Tape reading doesn't work in isolation. You need to factor in levels from the chart, you need to factor in broader market trends, and you need to factor in liquidity conditions. Most traders actually misread the tape because they don't do this. They don't isolate the moments that matter, the spots that should matter, from the volumes of noise out there. The way we quickly whittle down a tape into something that matters from our 325,000 odd minutes into that 60 minutes each day is actually a really simple process that so many traders overlook. So we just use market context. There's a whole video about it, but understanding the context is a key place to start. You want to understand how the bigger players have been acting to create a baseline of how you might expect them to act before you begin to read the tape. We'll add a bit more context when we're actually looking through some really good examples as we talk about it. The catalyst for the stock. Is the stock in play? What was the catalyst? Was it fundamental like a news story or technical like a breakout? Depending on the type of catalyst, we can determine, are the buyers going to be aggressive? Should they be passive? How's it going to look? And then we go into technical analysis. We're not going to overdo it, but we're simply going to look at what do higher time frames say about the price action. Is the stock in this bigger range or is it breaking out? Those two things alone give us a really good context to create what we call the opportunity. And the opportunity creates this framework for us to think about who might be playing the game and how might they be playing it. We take that into our consideration because a strong market with a strong stock moving higher on a strong catalyst, while it's breaking above a key technical area, I'd expect those buyers to be aggressive. I'd expect the tape to be aggressive. We can go on and on and on about different situations, but you get it. We just framed the opportunity, and we framed that opportunity with how we expect participants to act. Without a frame, you're likely to miss key things on the tape. It's like seeing a single tree and then trying to navigate around that instead of looking at the whole forest first and then isolating that best path forward. All of this gives us a path through the forest, an idea of what should be happening, what's to come, and where we can put our focus while we're reading the tape. But we can't avoid mistake number 3. Mistake number 3 is hesitating to act. The tape gives you this fleeting window of opportunity. Waiting too long can mean missing the best entries. This mistake happens so often early on, and I'll say this to you. Having seen traders get immediate improvement in their trading through our Scalp Radar course and through the tape reading we teach it in, Many traders know way more than they give themselves credit for. They learn quickly when to execute, what they're looking for on the tape. But then they get into those key moments, those pivotal moments, and they put themselves in the right position, but then they hesitate to act. It almost always comes down to one simple thing. Are they in a predicting mindset or are they in a reacting mindset? You can ask yourself this question during the trading day, and especially when you're reading the tape. Am I predicting or am I just sitting back and reacting? Predicting is dangerous. It's allowing many of the what ifs to creep into your mind, and it creates this paralysis by analysis. Reacting actually slows time down. You're open to the information presented, and you give yourself a freedom and a playfulness to all of this. Now that we're avoiding noise, we're looking for the right opportunities, and we're keeping ourselves in a reactive state. Now we can talk about the most important mistake people make when they're reading the tape. I think the number one mistake people make, and the most important one, is when traders misinterpret large prints or they misinterpret sweeps. Large prints are just larger than normal size, occurring either on the bid, the ask, or in the time and sales. People so often associate that with needing to be a big player that has far more in their order book that they're looking to execute. That's not always the case. Sweeps are when you see a quick move in one direction. Price sweeps higher, price sweeps lower. A lot of times when those are occurring, you're actually looking for clues that aren't there. Not all large prints signal a move. Sometimes they're just liquidity fills or they're spoofing tactics. You need to understand the context. And that context is built from what happens after those large prints. What happens after those sweeps. Where a bidder comes in immediately and clears the book, or an offer comes in and sweeps lower. What happens after that sets the context so clearly. As you look at a sweep lower, well, you could say, look at that sweep lower. But then immediately it's bought up and the bids step higher. The context there tells us this is an opportunity, not a threat. We can react to the opportunity because we're reacting. We're seeing it being presented to us. We're not overvaluing the context of what's occurring. Scalping trains you to read the tape on micro time frames. It allows you to refine entries and exits efficiently. So these skills are transferable to much larger trades. But if you're watching the tape at a critical resistance level, scalping teaches you how to spot those hidden buyers or sellers that are actually there. Those context shifts that will dictate what's going to happen and take advantage of those before others are able to. Scalping builds discipline. It helps you sharpen your focus. We start all of the traders on our desk with scalping, and then we help them read the tape so that they can take advantage of those opportunities, and they train themselves to take advantage of those key opportunities when they're presented. But if you're serious about leveling up your scalping game, let me introduce you to a tool we use at SMB. It's the Scalp Radar. So the Scalp Radar identifies high probability scalping opportunities based on those key tape patterns, based on what's happening under the surface. It allows you to focus on the most actionable trades in real time. It kind of removes a lot of the guesswork, and it helps build your confidence in your tape reading and your ability to execute scalping strategies. So if you're ready to take your trading to the next level, check out the link and learn more about the SMB Scalp Radar, and you can actually see it in action. Tape reading is a game changer for intraday traders. But avoiding these mistakes and practicing scalping can help you make all the difference in your trading. Start by identifying which of these mistakes you're making and focus on improving one area at a time. If you found this helpful, hit the like button. Subscribe for more trading tips, and drop a comment below with your biggest challenge in reading the tape.